Hey guys, welcome to this amazing YouTube video. In this section, by the way, my name is CJ and I'm a forex trader. So welcome to this section, and in this section we're going to be analyzing DXY and its contribution to other peers. So let's slide. Now, using the top-down analysis on the monthly time frame, what can we see? Now on the monthly time frame, we could see that the market is creating higher highs and higher lows. Now looking from here, the market has been creating higher highs, higher lows, higher highs, higher lows. Now the market came here, pulled back down. This is a 50 fib retracement level. Market went back up above this zone, found itself above this zone. It's supposed to retest the continuation, but it was exhausted, found itself below. So we're thinking about a downtrend. Now this market was ranging. You understand? If you find one thing with DXY always range, impulse move, range, impulse move. You understand? This pull up here now supposed to continue the higher height, but it was exhausted. Do you understand? It was exhausted. Now what can we see? Market found itself below this zone, came back down, came back below this zone, pull back up, came back. Do you understand? So we can see first touch of trend line, second touch of the trend line, third touch of the trend line. And the third touch of the trend line always causes, there must always be a reaction on the third touch of the trend line, and the third touch of the trend line always cause, like, there's always high tension on the third touch on the trend line, and currently market is on the third touch of this trend line here. Now if you zoom very well, you see the reactions the market is crossing at this third touch. Firstly, market came to this third touch of the trend line, reacted, pulled back up, came back again, reacted. Now on the monthly time frame, you could see an engulfing candle. Look at it, it is a clear engulfing candle. This is a pin bar to get out an engulfing candle. Now showing you that market is currently reversing. Do you understand? But the thing holding this from reversing is this resistance zone here. So what can we see on this place here? On the normal, we're looking at this with our normal eyes, this is bullish, but because of this accumulation here, market accumulated here, supposed to continue here, because if you use your 50 fib retracement level from here, from your swing high to your swing low, let's see what it gives us. You could see it clearly that the 50 fib retracement level, market went up, pull back down, reacted on this 50 fib. It's supposed to cause an impulsive move, but though later on it found itself below it, showing that the market is supposed to go for a sell. But this third touch always have high tension. Now we are expecting a bullish trend. So let's continue and check what we can see on the weekly time frame. Now going to the weekly time frame, what can we see? Now on the weekly time frame is here we come to check for chart patterns. Now on this part here, we could see again, let's check for structure, because structure is always tricky. Now you see reaction, just accumulation within these two zones here. Market went back up, created a head and shoulder, respected it, pulled back down, retested, came back down, this third touch, held it, went back up, pulled back down again, causing a double bottom. Now this is a neckline of the double bottom. You understand? So we are expecting market to come to this resistance zone, pull back down to the neckline and continue. Do you understand? So what are we expecting? We're expecting something as this, something like this. It has come here, we're expecting a pullback down to the neckline, then continuation. That's exactly what we are expecting, and this is the reason why GBP USD, NZD USD and other pairs are reacting anyhow, because of the DXY. Do you understand? So normally when the DXY is going for a sell, the USD pairs will be going for a buy. You understand? So this is the thing causing the commotion and reaction in other pairs, the USD pairs. Now going to the daily time frame. Remember, the daily time frame is the time frame where we come to check if the daily time frame respects the weekly and the monthly time frame. If they are both in line, then we can see it is tradable. Now going to the daily time frame, what can we see? By the way, if you are new in this channel, please make sure you subscribe, make sure you click that subscribe button and retweet. Now on the daily time frame, what can we see? We could see market creating this is a double bottom here. This is a clear double bottom. This is the neckline. Market what went back up. Now it's coming back to this support zone. Now if you check very well, this support zone also corresponds together with a Fibonacci from here to here. Now that's where we're expecting market to come to. Though we can come it here. Let's see here. That's where we're waiting for market to come to. Do you understand? So we're expecting market to pull back down to that zone. Now this is what I want to, this is what I'm seeing here, and this is what I'm expecting the market to do. Pull back to this zone here. Some minor reactions. Some minor reactions on this zone. Maybe a manipulation, then a continuation. That's what I want the market to do. And that's what I can see the market is going to do. Because that zone there, because this zone here is a 50 fib retracement level. This zone here is a 50 fib retracement level. And this pullback is looking somehow matured. This pullback is looking somehow matured. This pullback is looking somehow matured. So going to the 4-hour time frame. The 4-hour time frame is here. We come forward. We come to check for our is the 4-hour time frame is the time frame where we execute. Our entry. Now if you see now market is what respecting the CTL. Now if you are new here, this is what we call CTL, is our counter trend line break, that is for short form. So what we'll be expecting market to do is to pull back down, come back here, pull back down, maybe manipulate, come back here, pull back, continue. Do you understand? So at this point here, that's why I'm going to be taking trades. So I will call it, I'll also make a video when the market reach this place, and also do the video on how to enter inside. For now, I'm just trying to just see, expecting. You understand? Always be a reactive trader. You understand? So we're going to be, if the market do something as this, we're going to be entering here with here something like this, and this is going to be a 1 to 4 risk to reward. 1 to 4 risk to reward. So this is what we're going to be waiting for market to do, right? This. So going to other pairs, let's see what the market is doing. These are the pairs I'm looking at, markets. So going to the DXY, going to, which pair was I analyzing before? NZD USD. Okay, GBP USD. On the GBP USD, what can I see? Very good. On the GBP USD, using the top-down analysis, what can we see? Very good. Please look very well. Using the top-down analysis, now you can see market created a double top at this point here, pull back down, went back here, pull back down. So since 2016, market has been ranged in this zone. Later on, it found itself below it. We were expecting a pullback to this zone, the continuation down trade to become bearish. But what do you see? Market found itself above it, came back, retested on it, pull back up, retested, continue again, retested, then what, breakout. So we're expecting a retest, continuation. Though we're having a little bit of concern, this bearish engulfing candle was our little concern, because we're trying to say that is this candle, like, is the sellers that are in control of the market. So the sellers were trying to dominate the buyers. So this was our little concern. We knew that market is going to keep some little concerns. So what were we trying to do? We were trying to just see what the market is going to do. So now that was back in the past. Now looking at this, market was reacted because of this engulfing candle, bearish engulfing candle, went back up, went going back up. The buyers tried taking advantage but failed. Now we saw a pin bar and an engulfing candle showing us bearish momentum. Showing us bearish momentum. Do you understand? Market, it has found itself below this resistance zone. I'm going to the weekly time frame. What can we see? Now on the weekly time frame, we could see a double top. On the weekly time frame, this is a double top. This is the one leg, second leg, and this is the neckline. This is the neckline of the double top. Do you understand? This is the neckline of the double top. Now, seeing this from this place, what are we expecting? We found a candle, a bearish candle break of the resistance zone, and we could see some minor pullbacks here to the resistance, to that resistance zone. Now, going to the daily time frame to actually clarify and make more meaning out of it. Now, on the daily time frame, what can we see? We could see something as this. If we draw our Fibonacci from here to here, you'll see that that zone actually is also a 50 fib retracement level. The neckline is also a 50 fib retracement level. So I'll be expecting market to what? Pull back to this, to the 50 fib retracement level. Pull back, maybe come here, pull back here, and go to the 50 fib retracement level. Then a push to the downside. Now, since that's what we're expecting market to do, we're going to try going to the 4-hour time frame to see how we are going to enter inside. Now, going to the 4-hour time frame. On the 4-hour time frame, we can see the market is actually doing exactly what we want it to do. Now, once markets reach this place here, this is what we want to see. This we want to see. It's a very nice setup. So push back to this zone, push back down, come back here, maybe a little bit of push to the downside, small, then a down here. So we'll be looking for selling opportunities. Short position. We're going to be entering from here. That's if market does exactly like this, then our next tick profit will be here. So this will, like, we're going to be swing trading this, we're going to be holding it. So this is going to be like a 1 to 5 risk to reward. It's going to be like 1 to 5 risk to reward ratio. You understand? It's going to be a 1 to 5 risk to reward ratio. But though our first tick profit is going to be here, so our first trade profit is going to be like 1 to 2 risk to reward ratio. 1 to 2 risk to reward ratio. That's what our first tick profit is. Then our second trade profit is going to be here. So as you can see, these are the two pairs that I'm seeing. Okay, I see I have another one, NZD USD. Now NZD USD on the weekly time frame. Okay, going to the monthly time frame. Let's start. Always do the top down analysis. Now, for you to know, top down analysis is always the best, and top down analysis is king. So always do your top down analysis. Now, I'm going from the monthly time frame. What can you see? You could see the market is always respecting this trend line, showing you that this is bearish. The market is bearish. Now, I'm going to the weekly time frame to check for chart patterns. Now, reverse chart patterns. Now, you could see a head and shoulder on the third chart. This is a head, this is a left shoulder, head, right shoulder, this is the neckline. Are you understanding? So, on the daily time frame, going to the daily time frame, we will see the market broke out of the neckline side, retested on the neckline, continue, retested, continue. Now it's trying to do retesting again. Now this is a resistance zone. You understand? This is a resistance zone. I call it my supply zone. You understand? So I'm expecting, what am I expecting market to do? I'm expecting market to pull, come up here a little bit, push up, maybe manipulate small, then a breakout, a continuous breakout of a sell. So that's what I'm expecting. So in this place here, I'm going to be catching the sell of this. I'm going to be catching the sell of this, and once the entry look matured, I'm going to be doing a video on it, and I'm going to be sending it on my YouTube channel. Please make sure you always follow up and subscribe and click that notification icon, so that anytime I drop a message or I drop in my video, you'll be the first to get notified. So going to the 4-hour time frame to show you how I'm going to be entering inside. Now on the 4-hour time frame, you could see that this pullback is looking actually matured. Do you understand? Do not trade a pullback that is looking this steeper. If a pullback is looking this steeper, run away from it. It is a trap. You understand me? So I'm going to be expecting market to continue its movement back to that zone. From here, maybe pull back to these zones here, then come back here, then maybe pull back here, then do some double bottom, double top there, come back here, maybe pull back up here, or maybe pull back, then a break, a retest, continue, maybe. You understand? But if it does any of this, as I said actually before, once the entry looks ripe, I'm going to be doing a video and I'm going to be posting it on my YouTube channel. So always click, always follow up, always subscribe, always click the bell icon, notification bell icon. So let me assume that this does something like this. So it's going to be, and let me just see how many risk to reward ratio is going to be. Short position, let me come to this place, or let me come here. You understand? My stop loss normally usually be here, so we're going to be catching this to here. So this is going to be like a 1 to 4 risk to reward ratio. It's going to be like a 1 to 4 risk to reward ratio. It's actually massive and nice. A 1 to 4 risk to reward ratio. So this is what we're going to be expecting. So these are the 3 pairs that are looking ripe, that are looking really sweet. So do not sleep, like fold your hands. These are very nice players. If you like my content, always follow. Every week I'm going to be updating it. Every week I'm going to be updating it, what happens to it, and if it plays out, and why didn't it play out. So if you like my content, please make sure you subscribe and follow up. Have a nice day. Thank you very much. Subscribe, like, and share.